Federal Reserve Chairman Ben Bernanke said today that the central bank is ready to ease monetary policy further if the economy weakens and inflation moves lower, suggesting policymakers are actively mulling further stimulus. While holding to a view that recent economic softness would eventually pass, he appeared less confident in that projection and more willing to entertain the possibility of another round of stimulus.
On the one hand, the possibility remains that the recent economic weakness may prove more persistent than expected, and that deflationary risks might reemerge, implying a need for additional policy support.
Tellingly, Bernanke specifically noted Fed forecasts for June, which were already revised down significantly from April, had not incorporated recent data, particularly last Friday's dismal employment report. The data showed job growth essentially grinding to a halt in the last 2 months, pushing the jobless rate up to 9.2%. The Fed chief's outlook on the economy was cautious after recovering from the steepest recession in generations beginning in the summer of 2009. The U.S. economy has lost momentum in recent months. Gross domestic product expanded just 1.9% in the first 3 months of the year, and the second quarter does not look to have been much better. Bernanke held to the view that recent weakness was due in part to temporary factors like high energy costs and the effects on global industry from Japan's earthquake and tsunami, but he acknowledged the labor market remains weaker than the Fed would like.
The most recent data attests to the continuing weakness of the labor market.
Regarding inflation, Bernanke reiterated the recent rise in prices was most likely linked to transitory factors such as high energy and commodity prices and should trend back down. Financial markets responded immediately to Bernanke's indication that the Fed could resume easing, with stock prices climbing strongly after his testimony was published. Marisa Christian, IB Times TV.